Okay, can you please talk about a good strategy to take profit each week or month using the new quant index while also adding new investments? Okay, very, very good question. Very, very good question. So we've redesigned the new indices using an even superior model to allocate capital. What does that mean? That means at a high level, our indices actually take profits for you, right? So if we go to an index, for example, let me see if I can pull up an index here. This is a good example. Okay, just bear with me as I pull this up. Okay, this is not playing nice. Actually, here. Okay, so with the old way of using our indices, the allocations were done based on the grade. So basically, there are two ways to allocate capital in I would say that there's one main way people allocate capital in an index. It's typically based on market cap. So if you go to other crypto indices, even whether it's DeFi, Pulse's own indices or index, they have the DeFi index. That's basically just taking coins by market cap. And that works. I mean, that's a nice approach. It works. It's nice and simple. But as you know here, we don't like simple. We like the best. So a more efficient way to allocate capital is to factor in other methods, right? So for example, the belief, if you go into quant finance, there's actually a good article on this. It's actually modeled by Schwab. Let me see if I can pull this up here. Bill on our team actually used to work at Schwab as well. Let me pull this up here real quick. So in a way, we're kind of being inspired by Wall Street, right? So this is an article on Schwab called the Schwab Intelligent Portfolio. But this is now kind of common knowledge with the with people in the quant space. But what this basically states at a high level, most people who follow modern portfolio theory, MPT, basically believe that markets follow a normal distribution. So let me see if I can find the chart they had here, right? But that's not the case, whether in equities or even in crypto, right? Especially after the 2008 financial crisis, markets actually follow what's known as a fat tail distribution, meaning that the losses happen a lot more often and frequent than people actually anticipate. So in other words, black swan events happen a lot more than people believe, right? So if you go in crypto, for example, even good projects, black swan events happen a lot more. For example, last year, Matic has dropped over 60% twice, I believe. Not actually once, but over 40% twice. These are good projects, good fundamentals, good tech. We've done deep code reviews on them. Coinbase invested. I mean, these are solid projects. But in crypto, we all know this, right? That's why people don't hodl in crypto. So to apply normal distributions in crypto does not make sense. So how do you change that? You have to basically plan for the worst. You have to assume that normal distributions don't apply in crypto. And one of the models our team has been working with is called the Black-Littman model, right? It basically takes a normal distribution and introduces in our own AI, right? Our proprietary technology, the AI, and we kind of build a hybrid. We take what the market thinks is going to happen, plus what our AI thinks is going to happen, and we combine them, and we figure out the ideal weights to give each one, right? Maybe we weight our AI more versus the market, but we still have the market's view as a supplement to it. And we're getting all of that, and then we're building the indices. So now this part is not available to showcase, but we've kind of shown this on other live streams, right? Right now I can kind of show you maybe the behind the scenes of how this would work, right? Meaning that we can create customized portfolios, but also calculate the ideal allocation for each token and each coin, right? So for example, this is an example of the portfolio being generated. We can go through and customize this to the core for different exchanges, for different grades. So let's say you want to invest on Coinbase for 1 year. We'll use this quant grade for 1 year, plus this way to allocate capital more efficiently. to give you the right allocation amounts to invest in that is close to the efficient frontier. The efficient frontier and quant speak is basically the most optimum portfolio weight. Let's say you have a very simple portfolio. You have Bitcoin and Ethereum. What percentage should you have in each portfolio? Should you have 60% Bitcoin, 40% Ethereum? Should you have 90% Bitcoin, 10% Ethereum? Or should you have 50-50? What do you do? Well, using these models, we can go through and simulate all these different permutations and find out the most efficient portfolio allocation based on math. So we're doing the heavy math for you. And when we say the most efficient allocation, we mean the one that has the best risk to return ratio, meaning that you're getting rewarded for every risk you take. So we can go through, do all that for you, and we'll tell you the allocations for each index. We think this is going to be huge because, like, let's check right now. Actually, let me see if we can come up with a custom index here. So today is the 23rd, right? So we'll give you a freebie. So let's say it's the 23rd, and you want to build a portfolio with at most 10 coins with $10,000, and you want the minimum amount in each coin to be, let's say 10% to change things up. And let's say you want to, so we said 1 year quant grade. So let me just put that in here. Sorry, I'm just kind of, this is all behind the scenes. So this part will be launching on Friday. But right now, I just want to show you, I want to show the whole world how powerful this is. Because this is why we've been in the lab doing all this, right? So it's, I'll put in all those inputs. And this is what it gives me. I've told it at most 10 coins, $10,000 to invest in. Now we can also customize this to a specific exchange as mentioned, right? We can say, only show me coins on Binance, only show me coins on KuCoin, only show me coins on Uniswap. So right now, today, if you had to build a portfolio with 10 coins, minimum 10% in each, it would add 11% to Ethereum, 11% to Tether, 11% in synthetics, 11% to USD. So lots of stable coins here. So that's when you see stable coins, it's basically taking profit, right? So ironically, it's splitting everything down the middle. It basically has XRP, which has already been pumping. We covered XRP about 2 weeks ago prior to the pump. Bill has been very, very bullish on that. So it was able to pick up XRP just based on looking at the quant grade and quant data. And the rest is basically stable coins, synthetics, and ETH, right? And then you said, how do you know when to take profits? Well, when you see the stable coins, that's taking profit. You always want to keep a cash reserve to be able to buy dips, right? So when we launch the new quant grade and the indices, and it says stable coins, we highly suggest actually having stable coins. That's basically your cash portfolio. And every single month, it will rebalance, right? So this was the yearly index. Let's switch to monthly. Just give me 1 second as I make the switch here. So switching to the monthly index gets us this, right? So pretty much kind of the same. We have USD, Paxos, these are stable coins. We have Monero, we have Litecoin, we have NEM, we have Dash, we have Zcash, Bitcoin Cash, and Bitcoin. So basically, this portfolio is telling you right now, large caps is where the money is. Large cap and having some part of that money in stable coins. Bill? We can't hear you, Bill. Not sure what happened.
All right, on the subject
hear you now.
On the subject of taking profits, sometimes people may wonder, well, what it is that I do and how it is that I do it, right? So I read charts and I try to tell you what's going to happen next. And a part of that is combining, regular chart work with the AI metrics like the quant grade. Okay. So a couple tips. If you buy a coin because it appears in an index, when that index rebalances, say in a week or a month, if that coin is no longer in that index, feel free to take your money. If you buy something, say in the day trader index, because like Bitcoin Cash, Ripple, okay, November 23rd, okay, a lot of these coins showed up in the Token Metrics day trading indexes. Okay, so sometimes a day trade, it'll turn into a 1 week trade. You hold it for a week and then you take your 50% gain. Okay, if you're holding it on a monthly basis or on a weekly basis and you start to see the portfolio move to a lot of stable coins, even if your coin's still in there, that's a way to take profits. The best way to take profits is if you look at your P&L and you go, wow, look at all this money. Sell. You'll know the AI is smart, the quant grade's smart, but you're just as smart. All right. So it's not always easy for people to know when to get out, but DeFi 1.0 was a classic case that, you know, when you didn't, you really got hurt. Okay. So now flip it another way. Some people worry about getting out too soon. Now, there's a classic saying that fortunes are made by buying low and selling too early, meaning it goes up and you make money even though you didn't sell the top. Now, if you happen to buy a coin, say like Dash or something that continues to appear in weekly, monthly indices, maybe you stay with it. Okay. Maybe when it lurches up, you take partial profits, but if it's still in the indexes from the quant grade, you know, you buy the dips. Or if the quant scores high enough, you continue to buy the dips. Okay. So there are a lot of ways to do trading strategies, including taking profits off the quant grade, because the quant grade is going to move from one coin to the next or one coins to the next in the indices. All right. My concluding point, folks, the quant grade is awesome. It is a massive upgrade to RAI. It's going to make my life as an analyst easier, but you still have to do your homework. And the thing about Token Metrics is we make doing homework much easier. We're the Cliff Notes for crypto.
I like that. I like that. So if you want to get the Cliff Notes of crypto, be sure to subscribe to our newsletter. Go to tokenmetrics.com/newsletter. That way you get the email when we put out the announcement for the Black Friday coupon, because you have to enter a coupon to get the discount, 40% off. 40% off of Token Metrics for 1 year, for 12 months with this coupon, only if you purchase between Black Friday and Cyber Monday. And as mentioned, if you're already a customer, just email our support@tokenmetrics.com, or just go down here in the chat below and talk to them, and they'll take care of you, right? They'll extend your subscription and give you that 40% discount after it expires. All right. So we think this is huge. As Bill has mentioned, this can really take you to the next level as a trader, because the reason why we're so proud of this is because we all saw what happened in September. People were making money. People were printing money in crypto in August, but people didn't take profits. Not everyone took profits. When the correction came, it happened pretty much in a week. You wake up in a week, things are down 40%, 50%, or even more. So the party can end anytime. So being able to have a tool, a platform that can help you make money on the way up, but also protect your profits on the way down is huge. Because as we just, so here, sorry, let me just pull this up here. So as shown here, like every single time we're creating these indices, a part of the portfolio is in cash, in stable coins. So when market corrections come, you have capital to buy the dip, and you also be taking profits into cash. So this is huge. Being able to factor in stablecoins into trading and the analysis is a game changer. So definitely very excited for that. Let me take some comments here. Mateo says, so bullish. Congrats, Token Metrics family. Thank you, Mateo. We appreciate it. We're doing this for you. Dave says, I'm a straight up noob. You guys and BitBoy are an addiction for me lately. I can't get enough info. Thank you. We appreciate that. Then Jens Dan says, will you make educational videos on how to use the new system and how to use strategies? Yes, absolutely. We're doing it right now all week long. We have different videos coming out, different live streams. Then also on the Sunday live stream. So if you're not subscribed to us, every Sunday, 6 p.m. Eastern time, we have live streams on Token Metrics. We go for 2 hours, sometimes up to 3 hours. Me and Bill, we give you crypto market news, analysis, insights. We also show you how to use Token Metrics, the platform. So we're here for you. Token Metrics family, we do the content and the videos for free every single week. On our channel on YouTube, we post videos every day. So be sure to subscribe to our channel on YouTube if you're watching this from Twitter or Periscope or Facebook or from the podcast, right? If you go to our channel here, you can subscribe. So just youtube.com/tokenmetrics. All right, with that being said, let's go on to the next question, but tell us what you think. Tell us how excited you are. Be sure to get this video, like, subscribe, and share this with all your crypto investors and trader friends, because this is going to change the crypto space.